Hey guys, back with another update daily video here. Just wanted to give you my thoughts for my possible plays for tomorrow, Monday. So, as you know from my previous videos, I currently own 100 shares of IWM, which is the iShares Russell 2000 ETF. And I got assigned those 100 shares at $127 per share. So that's taking up a good chunk of my portfolio right now. But I'm curious to see what IWM is going to do tomorrow, because if it's up pre-market and if it looks like it's trending up throughout the day, then I may wait to sell the covered call on it. Because if I think IWM is going to go up to 128, 129, 130 on its own in the coming days or weeks, then I may just hold the shares and sell them outright for a profit. Because that way I can collect an easy $100, $200, $300 maybe, and then also free up that capital to maybe make another options trade for this week as well. If I think IWM is going to trade sideways or maybe even start dipping on Monday, then I might go ahead and sell that covered call on IWM maybe during the end of the trading day Monday. Because looking at the option prices right now, even though the market is closed, if I sell a $127 strike price covered call in IWM, I'll collect $249 of premium. So that's great, but you just have to keep in mind though that that's going to tie up my shares for the whole week. So the quote unquote risk with covered calls is always if the stock price goes above your strike price, because then you're potentially missing out on gains, or you are missing out on gains. But you can't always buy stocks at the very bottom and then sell them at the very top. You're always going to have some excess that you're going to miss out on. But at the end of the day, profits are profits. So what I don't want to happen is I sell this covered call on Monday for 127, let's say, and then by Friday IWM is like 135, because then I would miss out on tons of gains. So that's why I want to feel out what IWM is going to do Monday. See if it looks like it's going to trade sideways, it's trading up, see if there's any news that broke today or news that's coming out tomorrow to see how the market's going to react. So I just want to feel it out. I probably won't make a trade on IWM until Monday towards the end of the day at the earliest. So let's see what that does. And the other option I'm looking at is, of course, my tried and true favorite stock so far, which is AMD. So AMD has been trading around the low $50 for the past couple of days, so 53, 54. Looks like it's around $54 after hours currently. So that means that I can sell a cash secured put on AMD at an even lower strike price than I have been for the past few weeks. Because in my previous weeks, I was selling cash secured puts on AMD while the stock was trading around 56, 57. So that means to collect a good premium, I was getting in at 50, 51, 52. But now that the stock is a little bit lower in price, I can get in at, let's say, 48, 49 maybe, and still collect decent premium. I mean, right now, let's say I'm looking at the $49 strike value. Gives me a pretty good return on my risk at $32 divided by $4,900 of capital. So that's 0.6, almost 0.7% return on my risk, which is really good. And again, just a quick and dirty method of annualizing that will be about 34% annually if I can consistently get that return every week. So I'll probably end up selling 2 strikes of $49 on AMD. Again, I'll probably wait till Monday, end of day, because if AMD starts dipping throughout the day Monday, then not only will these premiums go up, but then I could get in at a lower strike price, meaning I could get maybe the same return at $48 or $47. So I've noticed that recently that instead of getting in first thing in the morning, I've been waiting to get in towards later in the day, because I've found that the premiums have been better or the same, but I can get the same premium at a lower strike value. So I've been waiting more now in the past few days in terms of my trades. And the other benefit is that if I was to make a trade Monday morning, well, I have now 5 full trading days for that stock to move against me. If I wait till the end of the day, Monday, I can still collect good premium, and now I only have 4 days for that stock to move against me in terms of selling weekly options. So that's what I'm looking at right now. I mean, even the $48 strike price at a return on risk of 24 divided by 4,800, that's 0.5%. So that's also very pretty good, and there's not too much of a difference there. So I'll most likely stick with the $49 strike unless AMD goes down even further, and then that might make the 48 or maybe even the $47 strike appealing. And again, I've owned AMD now at a cost basis of $51.75 per share, so I'll certainly be happy owning AMD at 49 or 48 or maybe even 47, because AMD's kind of been hovering around the $50 valuation. So if I can get in the high 40s and just watch the stock go back up to 50, 51, 52, I can sell those shares outright for a couple $100 worth of premium. And you already know from my last video, I had a trade on Space that I put on. So I had put on a trade, kind of a great trade right now, because it's, knock on wood, should be easy money, because I sold $8.50 strike cash secured puts on Space for $4 in premium. Now you may be saying, well, $4, that's nothing, right? Well, $4, it's an easy $4, because otherwise this money, this $850, would be sitting in my portfolio right now earning 0 money for me. So if I could put that $850 to work and make $4 out of it in a week, why not? Because $4 out of $850 is going to be almost a 0.5% return on my risk. That's almost the same return that I would get on my potential AMD trades. And then the best part about this trade is that Space is currently at 1586. Space would need to drop 1586 minus $8.50, which is my strike price. Space would need to drop $7.36 in a week for me to get assigned these shares. And to put that into perspective, that differential is 46% of the stock value. So the stock would almost have to halve in a week in order for me to get assigned shares. So you can see the probability of profit is almost 97%. So I have a 97% chance that I will just collect my free $4 and not get assigned any Space shares. Again, knock on wood, as long as Space doesn't implode or some really, really bad news come out that just makes the stock plummet, you're going to have a very hard time finding options trades that give you a 97% chance of profit with a 0.5% return on your risk. And if you do, please let me know. Please leave them in the comments below, because I'll make those trades all day, every day. So that's what I'm thinking about for tomorrow. As always, if you have any questions or comments, leave them below. And I just wanted to end this video because I wanted to give a shout out to another YouTube channel, and that YouTube channel is Kamikaze Cash. He's kind of the original YouTuber in terms of Theta Gang strategies. So I highly recommend you check his channel out. I'm going to link it in the comments below. Again, his YouTube channel is Kamikaze Cash. He's got some really great videos up there. He puts a lot more effort into his videos. He's got some funny videos and memes about the stock market. So definitely go check him out if you just need a break. But also he's got some really good information on Theta Gang strategies, and he's trading similar to how we're trading. So as always, thanks for tuning in. Give me a like and subscribe. Turn on that notification bell. And as always, happy trading.